Aaron's is one of the nation's leading home furnishings retailers. It leases and sells home furniture in its 1,800 company-operated and franchised stores. The company, founded in 1955, has been singled out recently by Investors.com as a top performer in the home furnishing industry. Robert Loudermilk is the chief executive of Aaron's, and Gilbert Danielson is the chief financial officer, and they both join me now for tonight's CEO sit-down. Gentlemen, good to have you with us.
Thank you for having us.
If you can, Robert, talk a little bit about the model for Aaron, because as we talked off camera, it used to be Aaron's Rents, and now it's just Aaron's. And for many people that are not familiar with the idea, there is a whole world out there of people not necessarily buying furniture or televisions, but renting them or leasing them.
Right. We're leasing furniture and TVs and appliances, electronics, and we do it by the month. We lease by the month. A lot of our competitors lease by the week, and we've taken a different road. We're the only people in the industry doing it, and it's really growing. As you said, we've been in business since 1955, but really in the last 15 to 20 years, we've been in the furniture and appliance, electronics business, and computers. So it's been accepted very well in good economies, and this tough economy is good also. So we're continuing to thrive and open new stores. We're at 1,800, and our goal is to get to 3,000 stores, and then we'll see where we go from there.
Gil, you moved away from the office rental furniture market. Why'd you do that?
We did. We've been in the rent-to-rent business for 55 years, and residential and office furniture rentals have been a big part of our business. But it's a commercial business. It's very susceptible to business changes and economic changes, and didn't have the growth aspects that our sales and lease ownership business does. And so we decided to get out of that business, focus on our core business. It has a lot of growth prospects, and that certainly was the right thing for us to do.
Robert, what about ticket prices? Have you seen any changes in the way the customer is spending money in the store? I mean, in other words, doing the leases, have the lease terms, have they been a little bit more difficult for people to meet?
Well, they have, and what we've done is we've extended terms a little. We had some 18-month product, and we extended that to 24 months. In addition to that, we have seen a little erosion from the average customers paying us about $160 2 or 3 years ago, and today they're paying about $130. That's fine with us. We're making more products available in a lower price point for them. The trade down. The trade down is happening in all strata of the economic out there. All the consumers are looking for a bargain. They're looking for a value, and that's what we offer. So we're happy with that. We're pricing our TVs, appliances, and furniture lower, extending terms, making it a longer payment, but getting the prices down that they can afford by the month. And I think that's really helping fuel our growth through these tough times.
Have you been able to discern any connection between what you're seeing in your stores and all of the talk about the unemployment rate? I mean, is it still as problematic as maybe we were looking at 6 months ago?
Well, it's not good, and everybody's stressed, and people say, well, gosh, your business must be doing well in these tough times because people can't get credit. Well, frankly, we did well 4 years ago, probably better. We'd like to see the economic times improve.
Sure, because people will have more money to actually go out and rent and lease the things that they want.
I think the perfect scenario for us coming out of this would be for job picture to get better employment, and credit will stay tight. So people will have a little more money to buy these necessities, beds, refrigerators, and TVs, but they still can't get the credit, the traditional financing programs. And we feel that would play good for our business going forward. So, but we've just done well through all these economies. We'll adjust our model as the consumer demands and as the consumer wants how they can pay for the products. Because again, we're a need item. We're beds, refrigerators, TVs, and computers. These aren't wants or luxury items. And I think that's what keeps us strong year in and year out. Because you're going to do without a lot of things before you do without a bed, and we're going to make them affordable for you, even though you don't have the cash or the credit.
Gil, what about expansion right now? Are there specific areas of the country that you're focused on?
Well, we got 1,800 stores. We're opening our 1,800th store Saturday in York, South Carolina. We're in 48 states. We're going to add about 150 stores this year, combination of company stores and franchise stores. And our goals for the next several years is grow our store base 5 to 9%. We feel we certainly can have a lot more stores in the U.S. and Canada, and perhaps other places throughout the world. And we should probably feel our market can certainly take another 750 to 1,000 stores in North America before we're done.
All right, I want to thank you, gentlemen, very much. Gil Danielson, Chief Financial Officer, Robert Loudermilk, the Chief Executive of Aaron's. Thanks for sharing your insights with us.